Time for the 360 round. It's time for a preview of Alphabet's earnings. And for that, we bring in our panel. Hatem Dhiab is with us, Managing Partner, Gerber Kawasaki Wealth and Investment Management, and Doug Astrup, Managing Partner, Exponential Investment Partners. Thank you both for being here. So as we watch Alphabet, Hatem, what are you thinking? Because, when we look at the FANG stocks, Google is really the one a lot of people still like very much. And since it's been beaten down and we see 52-week lows, what are you watching for in the earnings report that might even say, hey, this is a buy?
Hey, Nicole, thank you for having me again. Such a bellwether stock for the whole economy, right? So I think everyone is trying to get some signs of how things are going, how slow things have gotten from a digital advertising standpoint. And Google is going to give us really that what's happening, who's spending. They had a bit of a tough quarter last quarter. I think this quarter we're hoping that that's not going to be the case.
So there's hopes for something better or different. What say you, Doug?
Well, we couldn't be more enthusiastic about Alphabet/Google. This is just a dominant company in their industry. They've got over 80% of the online search market worldwide. And it's just a powerhouse company that dominates its business, has great profit margins, close to a 40% operating margin, and it's selling for a forward PE of 16, which is very reasonable, 5% earnings yield. So you're getting this dominant player with as wide of an economic moat as you can find in their industry, and it's kind of trading at a market multiple. So we think that's very attractive, and you don't get these kind of opportunities very often, so we would highly recommend buying the stock here. It's down 30% year to date, and it might be shifting from a high 20% growth rate to maybe a high teens going forward, but still growing very nicely. And earnings are taking a little hit this year because of inflation, but the top line is still growing nicely, and we expect the earnings growth to pick up again next year as inflationary forces moderate. So we're a big fan of this stock at this point in time, at this valuation.
Yeah. I mean, as you said, very enthusiastic, or you couldn't be more enthusiastic. In fact, you said it's one of our favorite names in the entire stock market. I mean, you love it. You absolutely love it, and think it's been beaten down, and you think the forward PE of 16 is really attractive at this time. Hatem, what are you waiting for? I mean, why isn't Google one of your favorites? And is it something that has to do with Apple's privacy? We have a lot of the tech names coming out this week. What would you buy at this point?
No, we like Google too, but also at that scale, it's really, really tough to keep growing at this level. And listen, they've been executing so well. I think 15%, 20% growth over the last few years have been fantastic. But when you're almost $300 billion in revenue, you're trying to look for different areas of growth. And for us, we're looking at cloud. I think cloud is an area that Google has to invest in. It's still not profitable for them just yet, but we want to see how are they growing that space, because that's going to be the next area where we're going to see some nice margins and so forth. As Doug says, they own 80% of the search market. If that goes down a little bit on the advertising space, they need to have other areas to grow. We're looking to see what Waymo is doing. It's not really profitable. It's not doing anything just yet, but that's an area that we're also looking as well. They had a bit of a freak out last week because Samsung phones were not doing as well against Apple phones, so they are trying to have the Google Pixel phone. So we want to see if that's going to be something, because Android is also a big profit center for Google. So those are some of the things that are very important to me at this point.
Yeah, Hatem, do you like Apple? You said how Apple is stealing share from Samsung phones. Just quickly, is Apple a buy for you, Hatem?
It's a buy too. We're just worried a little about what's going on in China. I think you covered it very well with your previous segment. But it's a dominant player, I think. And once you're in Apple ecosystem, you're not leaving.
Final thoughts here, Doug. You said that Alphabet was one of your favorites. Can you tell us any of your others quickly?
Yeah, and Amazon is kind of a similar name that's very attractively priced and dominant in its industry. And then if you want to get a little more risky or, you know, buying some stocks that have some challenges, we still like Meta, Facebook, but that's got a little more to prove than Google or Amazon does. And then, you know, these China stocks have sold off hard and the rebounding today, but you could go out a little riskier on the curve there and buy Baidu or Baba. But we think you just stick with Google and Amazon and Microsoft and Apple and those types, and you'll do great.
All right, Baidu and Baba, I wrote that down too. Great to see you both. Hatem Dhiab, Gerber Kawasaki Wealth and Investment Management, Doug Astrop, Exponential Investment Partners.